Welcome to my channel. In this video, I'm going to be covering Chevron, the big energy company. They announced their earnings today, and I'm able to update my analysis on the company and determine if it's a good buy, hold, or sell. My name is Victor. I have an MBA, business experience, and I do a lot of analysis on companies that I invest in. I'm an investor in Chevron, have been an investor for a long time. Before we move on, if you could do me a big favor and like this video, consider subscribing to my channel if you like this content. That would really help me out. Now let's get into Chevron. I like to use the scorecard as I look at my investments in stocks, and the scorecard has 4 questions that lead to a decision whether I should buy more shares, hold, or sell. First, do I want to be a part owner in this company? Do I want to be part of the industry? Do I believe management is operating well and performing well? Is debt under control and less than 3 times EBITDA? And I want a discount on the stock. I invest to make money, and buying a stock at a discount is the path for me to make money in a stock. Based on the answers to those questions, I decide whether I'm going to buy, hold, or sell. Chevron's been around for a long time. It was actually part of Standard Oil way back when. So it's been around for more than 100 years. And the company is diversified. They explored the planet, find oil reserves, take them out of the ground, refine them, transport them. They sell them in gasoline stations or lubricants, or they sell jet fuel to airlines. They're a fully integrated company. They even do chemicals. They take petroleum and make petroleum products out of it. They take natural gas, they make fertilizers out of it. So this is a big, big operation that's been around for a long time. I happen to know this company well because my first job out of college was with an oil company that ended up getting acquired by Chevron. So I was an accountant in those days, and I was able to really understand the company from that perspective. So I understand Chevron because I worked at an oil company. Chevron announced their earnings today, and part of the earnings is the income statement. Let's go over that first. So first, revenue went down, and the reason for it is oil prices went down. So less revenue. But as with oil prices going down, their revenue goes down, and so does your cost, because they buy crude oil and then sell it in the form of a refined product. So bad news, revenue went down, and it's caused by oil prices. It wasn't caused because the company's not performing well. It's not the company's fault. It's just the commodities, go up and down. They were very profitable in the year to date. So that's really good. The other thing that's really good is they're buying back shares. So they're on a big share repurchase program. Chevron made a lot of money in 2021, 2022. They're using all that cash to rebuy shares. Oil prices really have an effect on Chevron. If oil prices go down, revenues go down. If oil prices go up, Chevron's profits and revenues go up. And over the past year, you see that oil prices have actually gone down 19%, or $19 per barrel, which is a significant drop. The encouraging news is that in the last, let's call it 30 days, just in July, oil prices have risen $6 per barrel, or 12%. So if oil prices continue to go up, we did get some economic data showing that the economy is doing fairly good. Airlines are flying all over the place because people want to travel. So there's a lot of demand on oil. If it keeps going up, let's say it goes up to $90, $100 a barrel, Chevron's going to be very profitable. Chevron has a very strong balance sheet. The balance sheet has a debt to EBITDA ratio of 0.35. So they can pay for their debt very easily with their EBITDA, and they have a lot of cash on the balance sheet as well. Looking at the statement of cash flows, they produce positive free cash this year for the first 6 months of the operating year, and they're at $6.7 billion. Last year, they had a record year for free cash flow. In the first 6 months of 2022, they had $16.7 billion of free cash flow. Again, they're using that free cash flow that they had, that they made last year in rebuying shares, which is a good thing. $6.7 billion of free cash is excellent. I'm going to determine the value of Chevron stock using 2 methods. The first is the free cash flow method, and the second is the earnings per share value method. Let's go over the free cash flow method first. I'm going to use 60% of 2022 numbers, and I expect that they're going to produce about $22.5 billion in 2023. They're going to grow those free cash flows by about 4% per year, nice conservative number. And then the terminal value, all free cash flows after year 4, amount to almost $400 billion. This is a big company, big operation, and they produce a lot of free cash. Now, all those free cash flows, I'm going to discount them at 8.5 as my weighted average cost of capital. And I get a present value of all those cash flows of $342.9 billion. I'm going to add the cash on the balance sheet and take away the debt. And I get to an equity value for Chevron of $335 billion. And the market cap is only $298. They've been rebuying shares, and there's a lower number of shares outstanding currently. But using the free cash flow method, it provides a small discount of 12%. Using the earnings per share value method, I start with the earnings per share that's expected. I think they're going to do $13.77 per share. They might even do better. Go with a nice conservative price to equity, price to earnings ratio of 10. And I get a EPS value that actually puts the share price at a 24% premium. So you would be buying shares at 158, where earnings per share value says that they should be worth about 120. When I combine the two, I put more weight in the free cash flow method, and I combine the two. I take two parts free cash flow method, 1 part earnings per share method, and I get to basically a 0, meaning the shares are fairly priced at $158 per share. So let's revisit the scorecard. Do I want to be part owner in Chevron? Yes. Do I want to be part of the oil industry? Yes. I understand oil prices. I know there's going to be fluctuations, but I think it's a good industry to be a part of. The management team here, I believe, is the best management team in the industry, doing a great job. Debt is well under control, well below 3 times EBITDA. There's no discount available on Chevron right now. So although I'm going to hold my shares, I'm not going to buy any additional shares. I have to see oil prices go up. And if that is so, then I'm going to buy, Chevron stock, because I'm going to believe that they're going to make a lot more money. If oil prices come down, the flip side. But for now, I'm just going to hold my shares and wait for the data to tell me that the company should be worth a different price. Let's look at the share price for Chevron over the last 5 years. If you look at the value that I just determined, $159 per share, you see that it's fairly priced at the current time. But not too long ago, in 2020, 2021, you could have picked up Chevron at less than $100 a share. And I did so. I bought a lot of Chevron in those days. You'd be sitting on a really nice gain. The goal of my investing is to value stocks, understand what I think the company is worth, and look for opportunities over time when I could buy shares at a discount. That's what my goal is. And I'm sitting on really nice gains for Chevron because I did so. I did my homework and I bought when the price was low. Looking at year to date, the stock is down 8%, primarily driven by that drop in oil prices that I mentioned earlier. Again, the company's operated really well, and they pay a dividend of 3.8%, which is really nice to have. Thank you so much for watching. Do me a big favor and like the video. Consider subscribing if you like the content. I really appreciate your time, and good luck investing in 2023.